Okay, quick Friday morning radar update. So, gap up in the markets today. We're into lunchtime already, actually. Quick lunchtime radar update. I'm busy trying to source something on the internet and it's driving me crazy. So, gaps up in the small caps, 250, FTSE 100. The gap has been approached. And the DAX has just said, hang on a minute, I'm just going at this alone if you're not coming with me. But the gaps is strong. Stocks are all over the place. The elephant in the room. I promised I wouldn't cover any of these anymore, but I'll just get this one out of the way. So, as you know, I've done pieces on this in the past. It went through our screens down here. Low risk entries. I'm trying to stay away from social media and all that sort of nonsense, but I'm pretty sure if I looked on social media, there will be people on there saying, this is what happens if you ride high growth stocks. This is what, I sold previously. This, that. You know, this is the reason I sold, this, that. At the end of the day, we ride growth stocks for huge trends, and anyone who didn't get a huge trend out of this stock must have been on a different planet to where we sort of exist. 1000% move, even through a swing entry, what we looked at as well, and this one exceeded expectations and went off on a huge run. Now it's not passing the trend screen anymore, this stock. It's down over, probably by the end of the day when it updates, it might be down over 3 of the time frames I follow. It's definitely down over 2 of them. So it wouldn't pass it dropped off the GTRS a while ago. It did throw a little swing point here as well. I don't take secondary tracers. I try not to anyway. Not for me. No position. But just remember, hindsight don't pay the bills. Great growth moves do. Sour grapes from people who never rode it. I didn't ride it either, you know. Sour grapes will always jump on this and say, this is what happens if you ride high growth. Well, you ride high growth, you get paid handsomely. At some point they roll over, and it was down 50% here. Anyone who's involved with this when it's halved in price is on a different sort of strategy than anyone who rides growth names, I would say. So, volatile mover, but that is all I've got on that. Things to remember: at some point, everyone gets profit warnings. Out of the blue, your stock could be up here, bang, get lessons in risk management. If you want to know how to sort of avoid the sort of portfolio obliteration these things can cause, you have to learn risk management. That's what I do at Trading Bases. But if you go and read the last ShareScope tutorial, we talk about questions you need to answer before taking a trade, and that will keep you out of trouble in anything like that. Moving on, let's just jump straight into the volume leaders today. I say straight in after talking about that for 4 minutes, and I promised I wouldn't. It is now 12 o'clock and we should have traded 47% to be on average volume. Not that much holding up in the large caps. Obviously the AIM 100's in this mix. Tune though, obviously. You continues until it got bought out, didn't it? And let's have a look in the small caps. Excuse me. What did we say again? 47% to be on average. Lots moving in the small caps again. Amazing. Let's have a buzz through these. Loss making, loss making, loss making. Kind of lower high in the numbers in that one. Ticking up, lower high. Return to growth in this one. Tick up in the numbers, lower high. Obviously this one doing okay. You know, I'm looking for actionable areas, aren't I? MPAC, higher high today, higher high in the numbers as well. Go figure. HE1. That one dropped off a ledge, didn't it? Total POS, no forward numbers on it, whatever. If you enter the POS arena, you expose yourself to the unknown. SH. Jarvis on volume today. Just normal pullback in that so far. At some point all trends end, I can promise you that. AMP, kind of steady numbers but still ticking up again, isn't it? It's doing okay so far. AUG. I don't know what that one was. Taylor Maritime Investments. Moving on. Yeah, not much to look at today is the Friday kind of market. So I will leave it there. Remember, risk management first. Gaps will happen. We've got a pretty good record. Not had one like that in a long time. You will have them if you trade small cap. You will have them if you trade biotech, swings, and small caps. They will always. There's always the next one ahead. There's bankruptcies ahead of us. There's gaps in 50% gap downs ahead of us. They are all ahead of us. If you trade enough trades, you will get one. There's no way of avoiding these things. If there was, the people who know how to avoid them would be short them. They would be killing it on the short side, but no, they're not. They're just rattling the sort of cages of people who do get caught. So in hindsight, we'll leave it there.